First, the news flow. It's a big one. The largest insurer has listed at a discount on expected lines, one would say. What does this say about the theme as well? Because somehow, as much promise as insurance held at 3-4 years ago, the stock returns have been abysmal, and LIC probably is part of the same game, so to say.
I mean, I find it absolutely absurd, when educated fund managers come on television or in print and say the insurance is a great industry, India is underpenetrated and this and that, and therefore buying an insurance stock is going to be great. Because buying private sector banks back in the 90s was a great trade. Okay. I mean, I say, guys, private sector banks, when they listed some of them, and there was HDFC Bank, which was the main one, and then Kotak Bank, because it went through a few avatars as NBFC and then a bank. The reality is that those banks listed right in infancy of their businesses. They did not list when they had already reached a huge size in terms of assets and profitability. In our case, all our insurance companies that listed in the last 3-4 years listed when they've already reached a very significant size and scale of operations. Therefore, most of the value is already captured at the pre-IPO stage itself. And that's exactly where LIC belongs. LIC is no spring chicken. LIC is the oldest game in town. It's just that it's now come out into the real world. It's been around, decades, guys. You're not going to make outsized gains in companies that have already reached that size and scale. So you cannot compare insurers to private sector banks that listed. HDFC Bank listed, I think, within a couple of years of its starting operations from a little office in Worli. Are any of these guys in that situation? No, they're not.
Got it. Okay. Fair point. And therefore, from a business case perspective as well, or from a market gain perspective, insurance as a parcel, you don't think is going to make you the gains that you desire, at least?
So, insurance is a business which, very few people understand. It is a huge marketing machine at one side, and it's a huge investment machine at the other side. And to make both ends of the machine work very well is not an easy task in the first place. Second, the data for India is not that comforting from a under-penetration standpoint. Okay. Because the amount of premium that is generated relative to GDP is not small. It is actually a fairly significant number already. It's actually higher than most emerging markets. So, per capita skews the whole thing. Okay, because India has a large base. But on a GDP comparison, it's not that we collect very, very little premium. There's a big headroom available. So it is an average business in my view. Okay, it's a great business if these guys had listed at the infancy of the news. Obviously, in LIC, that's not possible. In the other guys, that might have been possible. But most of the juice has been sucked out already from at the point of their listing. So whatever might be the business, I'm interested in buying a stock that makes me money. The business might be great, but what is the use for me as an investor if all that business is already captured in the valuation at IPO time?